Morning, Steve Freed in Chicago with morning grain comments. Well, it's Friday. Yesterday the markets broke on news that China had refused some DDG cargoes, and they were concerned that if those DDGs is not shipped to China, it'll back up into the United States, and that will reduce meal demand, which will reduce the demand for beans, which will reduce the crush demand, which will increase the carryout. And so all those things kind of weighed on the market. During the noon hour, we also saw a forecast out of Argentina that was a little wetter than the morning forecast, so things kind of piled on to the beans and corn market. Overnight, beans a little bit better, corn and wheat's unchanged. The big news outside markets, the dollar's sharply lower, and so people are trying to scratch their heads and see, why is the dollar so weak this morning. In the beans, I think a little bit of buying in hopes that if China does take less DDGs, that maybe they'll have to buy some beans from us to make in the meal to offset the less DDGs. The other thing is that the cold weather that's coming across the United States could slow movement of grain to the ports, and so that might offer some support. The nearby soybean export basis is firmer because of that. Other than that, the Brazil weather looks good. South Argentina weather actually looks a little drier this morning. We're kind of fine-tuning whether it's going to be 60% coverage, 70% coverage on Sunday through Tuesday, and whether the amounts will be a tenth to a half inch or maybe a half to three-quarters of an inch. So it's a needed rain, not only for the crop but also for the market itself. So we'll be kind of using a low volume holiday trade today. Don't expect a lot of change in prices. It was interesting that the University of Illinois put out a report yesterday saying that based on high cash rents, based on the revenues that are coming in with the lower corn prices, they expect Illinois farmers to lose $50 an acre in 2014. This is after losing $80 an acre in 2013. Making $180 an acre in 2012 and $250 an acre in 2011. So obviously there is some concern about net farm income with especially these lower corn prices. As always, these are my thoughts, not those of ADM or ADM Investor Services, and have a safe and profitable trading day.